Hello everyone, my name is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis, market commentary, trade ideas, and of course, mechanical trading systems since 2003. Okay, let's go ahead and get right into it. So this is the market recap newsletter for Wednesday, October 6, 2021. As you can see via the table of contents, this newsletter is divided into 5 sections, same general theme as I always keep. First off, before I get to the general market, it's been a wild action the last few days. The market's been in a range, in a big coil essentially that you'll see on the S&P. And anyway, I'll get to that in a minute. The first thing we'll discuss are these various systems. Then we'll move, of course, into the general market analysis, look at the major indexes with a focus primarily on the S&P and NASDAQ. We'll look at some indicators, a few sectors, dollar, commodities, precious metals, GDX. And by the way, really nice moves in some of those recent trade ideas in that area that I've had on the newsletters for the last week and a half. GSS, HMY, IAG. And I added some new ones tonight. NG, HL, NUMA, and NGD. Trade ideas, going to be recapping a few recent ideas, but mostly I did add some new ones. Here's a list of some of the new ideas. All right, so there are some pretty nice, to me, what look like nice trade setups in the precious metals, and a few here should the market continue higher. All right. Again, quick note on the market. We've been in this range for the last few days. Today, the market opened down. Futures were down quite a bit last night. Recovered off the lows, but even on the cash open, the market gapped down, sold off for the first half an hour. Then it recovered pretty nicely with the S&P closing up about 18 points. Again, that was quite a recovery. It was down something like 40 points intraday. It's basically closed at the top of a range of a coil. I think more likely it'll break out of that range and follow through to the upside tomorrow. That's my best guess. We'll see. And the triple Qs had sort of an inverse head and shoulder pattern look. So we'll look at that. Again, let's go ahead and get started here with the items. So first image below, this is the image of the SPY systems. As you know, there's 22 SPY systems, individual systems on this ETF. I have them all spread around these various charts, 10 of the long systems on the one chart, a bunch of 9 of the short systems here, etc. No changes here. This system remains long even despite today's rally. Now they could change tomorrow if we get follow through. It's possible we can get an exit signal. But for now, we still have an open trade on the SPY systems. Okay, these are reversion to mean type systems. Next. Image number 3. So here's all the long subsystems for the SPY system. There is 12 of them, okay? And it's this subsystem that has a first entry open trade, which is the QE BTS. Again, there's all these other various subsystems. They're doing their own thing. I will do a video on that another time where I go more in depth into the SPY systems. But essentially, we have one of the subsystems are long, okay? Next, image number 4. Here's an image of SPY, and this is my RSI2 system. I've had it for many years. It's a very well-known type system. Think of this like it was popularized by Larry Connors. His concept was to take an RSI2 length indicator, and if you're above a long-term moving average, say a 200-day moving average, 150-day moving average, whatever, when the RSI2 gets oversold, you take a trade, and then you get out on a bounce. Now, there's many variations to this type system. You could wait for the RSI2 to get overbought, which in some of these cases would have given you a better exit. I've found for less drawdown, it's better to exit after a rally above a fast moving average like an 8 or 9 SMA, like I show here. You can see the system here actually did a similar trade to some of the SPY systems back in early September. First entry was a bit early, second entry, nice winner. And we have an open trade here, the same as one of the current SPY subsystems, the QE BTS. Now, I don't officially use the RSI2 system with my other SPY systems because for two reasons. Number one, the trade statistics here are pretty good, but they're not as strong as my other SPY systems. And number two, there's a lot of overlap, so there's really no need for it. But I do have this system, you know, especially if anyone has any more questions about this or, you know, want to see, if you want to have me continue to show trades with this, let me know. And finally, chart number 5, here's the NASDAQ McClellan oscillator system. It's based on the McClellan oscillator. This is the back-tested version. Whenever it closes below the lower Bollinger Bands, it takes a trade, and then it gets out. Many of these trades are pure reversion to mean. They're faster than the SPY system. A lot of these end up being just one-dayers. Get in, get out. That is it. They're not trying to hold these trends. Okay. The McClellan system went long on Monday, had a nice trade, as you can see here. So I know some of you took that trade, and congrats. I will start to implement these more on the websites. I've had some confusion about these. Right now, I post these on the trading community blog, and I do discuss them, but we don't officially track them on the website, guys. The official reversion to mean website, or the official reversion to mean systems on the website are the SPY systems, okay? But I know these are quite popular, so I may add these officially. I did send out a trade notification on Tuesday letting you know midday that this system would be exiting. I confirmed it on the trading community blog. I had one person write in, email to me who was angry, stating that they didn't see the email until well after the market closed. My comment to that is I sent out an intraday email. I also posted it on the trading community blog near the close. All right. And remember, Qs trade up to 4 hours in after hours. So you have plenty of time to exit. And you know what? If you didn't exit yesterday and you held today, you have a better price. Okay. Next, let's go ahead and move on back to the general market. So here's the index sector table. What transpired today? So you can see we had a nice recovery in the indexes. They were all nicely down this morning. They all recovered with the exception of the Russell that still closed down. We've had a nice recovery this week. You can see we have the S&P and Dow slightly positive now, and the other index is still down. As far as the major market sectors, about a 50-50 mix of up and down here. Energy, which has been on fire, finally had a pullback. That was well overdue. Again, that sector's been on fire. Currencies, US dollar, rallied off that support I talked about. That, of course, didn't matter for precious metals, which were up today. Crypto's been on fire. Cryptocurrencies like Bitcoin, Ethereum had a perfect ABC correction that ended last week, we pointed out, and it's been a nice rally. So hope you guys bought some of that the previous week. Nice moves. Commodities, a lot of commodities were to the downside with the move up in the dollar today. Crude oil down about almost 2%, natural gas down 10%. But again, remember, that's been on fire, so not surprised to see some give back there. Agriculture, corn down. Precious metals bounce, though. Gold up about 0.3%, silver up 0.2%. It's not much, but the stocks outperformed quite a bit here, which is what I like to see. And there's some nice trade setups there. And look, GDX is up 3.4% for the week. So outperforming gold quite a bit. For the miners, you want to see the stocks outperforming, and we're starting to see that. And you can see as far as bonds and rates, high yield corporate still slightly down, TLT up about 0.5%. And of course, long-term rates were down, which was good to see. Next, item number 7 shows the economic news calendar. So tomorrow, October 7th, we have initial jobless claims in the morning. Then we have natural gas inventories. And then, of course, Friday is the all-important non-farm job payroll report. Usually the market rallies into that, so we'll see if that ends up being the case. Also, as far as earnings season here, earnings season begins next week. And that's the trick here, guys. Usually the market holds up during earnings season, and maybe that'll be the case now. But it's going to be interesting to see how the companies guide, especially with a lot of these issues we've seen with, supply chain issues, manpower shortages, etc. All right, let's go and jump to the charts. So the first chart below, item number 8, is the daily view of the S&P we've been showing for quite a while. So back in September, we called for a correction in the market because of a variety of things. We had a little completed 5 waves up here that you'll see on an intraday time frame. We also had seasonality. The market, historically, if you go back 100 years, usually is weak in September into early October. And that ended up being the case. We had an initial ABC pullback here. We rallied. We thought we'd form a lower high here, which we did. And we thought we'd come down again, which we did. Okay, now could this be a bottom and we rally up to new highs? It's possible. It's also possible that we rally up into this area, form another lower high, then come down, get near the 200-day. That's another possibility. But I do think there's chance that we could have follow through on today's rally, at least up into this area. We closed right at the 9 EMA here. Next. Chart 9, here's the other daily view of the S&P. The moving average ribbon. First off, that lower high rally here, that was a great shorting opportunity. Get your initial sell-off, rally, back test of this broken trend line. The moving average is kissed on the underside here, bearish squeeze, and sell off. You can see the last, again, few days we've been in this range. It's been very emotional if you've been following the market like on an intraday basis. Up, down, up, down, up, down. All right, so now we'll see if we can break out of this range and maybe rally up to the 20-day here and this downtrend line. This is your bigger support here, and then, of course, the 200-day below, which we're far from. The lows here did have a nice MACD histogram divergence. Not on the standard MACD, but you had it on the histogram. And, of course, the 5-length RSI. Also, guys, I apologize for my voice. I got some congestion going on. Not COVID, by the way. Next. Chart number 10, here's the quarterly view. Again, I just want to put the larger term into perspective. We've had just an unbelievable rally from the March lows of last year. This kind of action here is unsustainable, right? So in September, we ended with these really ugly inverted doji candlesticks. These tend to be areas where you near tops. So my longer term, I do think there's a strong propensity for an eventual decent sideways correction pullback, at least down to the 9 EMA or 20. But it doesn't mean it has to occur now. So basically what I'm trying to say is these charts concern me for the intermediate term and next year, but not right now in the short term. Okay? Next. Moving on to the intraday charts. Here's a 60-minute chart of the S&P. It has all these wave count breakdowns where we had the 5th wave high there in early September. Then we sold off ABC here. Then made a lower high. Then we're down. And now we're in this coil range. But this is kind of I'm not going to go way into the wave counts here tonight. So let's go and look at a cleaner chart just to keep things simple. So here's a very clean 60-minute chart of the S&P. So you can see the initial decline, lower high, decline. Right here at this lows, we had some MACD divergence. We rallied up from, sold off, rallied up. So very emotional here over the last few days, as you can see. It could be an emotional nightmare if you're following this short term, if you're, if you're trying to apologize, guys. My son came in here, so I had to pause the audio. So anyway, very clean chart. So you can see we're in this range, and these ranges could be very emotional. I know a guy who was long. He sold this morning right at the low here, and now he's feeling very emotional because, he sold here, and, that's how these markets tend to be. They like to trip you up. Anyway, we're in this coil. We did close at the upper range of the coil. You know, could price pull back from here again? Yeah, it could. But I also, just the way we closed, I think there's a good chance that we follow through tomorrow. That's my guess. Now, your longer term resistance, the first one is the 61.8% fib from this recent high. That's right here at 43.94, rounded up to 4,400 essentially. Okay. Then you don't have much resistance until this open gap up here, almost all the way around to 1440. And then, of course, you have your downtrend line here. So I do think we follow through tomorrow morning, guys. And these are your next resistance areas. Here, the open gap, and, of course, this downtrend line from the highs. You know, the bullish view is here. Short term, we got sort of a little inverse head and shoulder look to it. This is not a traditional inverse head and shoulder pattern, but you can kind of see the, you know, the right shoulder, left shoulder, head, and you can see essentially the same pattern here in the moving average ribbon. All right. Let's move on. Chart number 13, here's a 15-minute view. So you can see the same coil in action. Again, we closed right at the upper range of this coil. Here's your 61 fib. Here's your open gap. Finally, chart number 14, here's a 5-minute view. Shows you what happened today. We gapped up down. My friend, as I said, sold out his long positions around here, unfortunately. Then we bottomed. We formed this coil for the next few hours, which I pointed out on our trading community. You should go there during the day if you can. We busted out of that. Then we had a little ABC correction here late day for then another pop. So pretty nice recovery here. S&P was 42.90 here at the lows. Hit a high of 42.65. So good 75-point range. Next. Moving on to the KISS charts. So here's one thing I want to discuss, guys. These KISS charts. So these are the daily S&P. As you know, first off, these ATR, these DVTs were hit a few weeks back on the dailies. We had this ATR here. This is the weekly ATR, which we've been talking about all week. Price has been essentially bouncing around off that weekly ATR, undercutting it a little bit. Pinocchio moves below it and then recovering on a closing basis. And today we retested it, rallied off of it. This is one version. Here's another version that shows this system going back long. You see the vertical line. Now, what's the difference between the systems? It's the length of the BPTMA on the ribbons. This one uses a faster 13 length, which turned green today. You see that? That's what caused it to go back long. What it's trying to predict here is an ABC-like correction. A, B, C. So long here, put a stop at the lows. This one uses a longer 20 length that is still red. So that's really the only difference, guys. Now, which one is right? Flip a coin. That's why I always state there's not an exact science to this stuff. You know, it depends on whatever length of these you use. And, you know, sometimes one length's going to be better or sometimes another one's going to be better. My suggestion to you is, again, you have to make your own trading decisions. If you're still not sure the lows are in the market and you don't want to take the risks, then wait for more confirmation. If you feel like you want to be long in case the lows are in and we have a decent rally into earnings season, put a stop in play. Be long and put a stop. Here's your stop. That's simple. Okay? All right. Let's move on. Chart number 16, here's the cycles. So when we look at the cycles here, we'll look at the shorter term ones. 120-minute chart, ATR's overhead is still your resistance. And this 50% area on the 60 stochastic, that's always an important area. We're still below that. The 60 stochastic, yesterday we broke above the ATR, which became support. You can see this morning it held on the pullback. You see that? and we rallied right off of it. We had a buy cycle there. The 60 stochastic still isn't above the 50% area here. Next. Chart number 17, here's the triple Qs. Nice rally today. We did bounce off this support zone on Monday. You know, even with today's rally, we still did not close at or above the 9 EMA. So that's still your short-term resistance. See that? My concern longer term is that 200-day moving average wasn't very far away. So, you know, could we rally up, form a lower high, and still come down to there? That's my concerns. But again, we'll see what happens. If you feel like you need to be long, like I said, be long. Have a stop in place. Okay? But nice rally today, but we're still below that resistance. And we did rally from this ABC projected low anyway. Next. Chart number 18, here's a 60-minute view. A couple things to monitor. First off, back here in early September, we pointed out this umbrella top, which broke down. Every rally back tested that broken trend line, became resistance. Sold off. We made the lower high bounce, wave B that we called. Sold off. And you can see we put in a little low here. We broke this little channel, formed a higher low at a little rally this afternoon. Okay. So we have a higher low here. Like I said, if you're long, here's a great place for the stop, this higher low. I wouldn't give a stop all the way down here. Put it here. Okay. That's where your stop would be. Some other things, other observations, education, the moving average ribbon here, which is a very good guide. You can see when it flipped bearishly stacked back here, that was a great area, especially when you lost support, to tell you the trend had changed. Then it pinched on the underside, price stalled. Same here. Now, when the ribbons get too wide like this, you're due for a reversion and being rally. That's what you got here. Notice how wide the ribbon was here. So here, ribbon was wide here, and you got a rally. Ribbon wide here, you get a rally up. Okay? So very simplistic guide, but it's pretty effective. Now you can see it's starting to pinch again. I think there's good likelihood we could see the ribbon go slightly positive here. Next. Chart number 19, here's a 15-minute chart. Steve discussed on Tuesday the possibility of a right shoulder higher low forming, and that's what formed right this morning. You see that higher low? And you can see this kind of a sloppy inverse head and shoulder, but you see it here. Went ahead and drew a trend line connecting these data points. We closed right there today. Again, if you're long, these would be some potential stop out areas, these higher lows. And really not a lot of resistance till you get up into here. Next. Chart number 20, here's the triple Qs, KISS charts, and the same thing just like on the S&P. On this version, it's still out. On this version, it went back long today. So which one is right? You decide. If you want to be back long, I gave you some stop out areas above on those higher lows. Okay? Next. Chart number 21, here's the various cycle time frames. Not a lot to say here, very similar. 2-hour chart, we're still ATR resistance here. And on the 60-minute, you know, this ATR, we're above it, that's support. Not as strong of a bounce up so far as the S&P. Next. Following up on some of the FANG stocks, one thing I pointed out early this morning was that the FANG stocks were holding up very well, and that was a positive sign for the market. And that ended up playing out. So you can see Apple, nice reversal. Still under its 9 EMA. We never did get down to this support, 200-day moving average, which bothers me. I still think that could happen over time, but, you know, we could rally up here in the short term. Next. Chart number 23, Microsoft had a nice recovery. And this one closed well over its 9 EMA, back to its 50-day and declining 20-day. So that's resistance, but it was acting very well today. That helped the market. Next. Chart number 24, Google. Also was up nicely, closed over the 9 EMA. Obviously, big resistance up in this area. And finally, face crook. We all know about the craziness yesterday. It was up today, but you can see how far below at 9 EMA. Longer term, I think this thing's going lower though, guys. Maybe we get a rally up here, give you a short opportunity. Next. Chapter 26, IWM small caps. They underperformed today. Otherwise, the daily pattern is very simple. We're in this big coil pattern within the larger channel. Next. Chapter 27, following up on ADR, which I mentioned on Monday. Notice it was down today, bounced off this support. That's big support. Maybe it rallies up, forms another lower high. This area right in here is a big thin zone. So if this comes down again into there, that could get ugly. But for now, maybe we rally up. Next, looking at the VIX, down today as you'd expect, right to its middle Bollinger Bands. Next, chapter 29, the VVIX, still above the 110 area. We want to keep an eye on this to see if it falls back below 110. Next, chapter 30, J&K High Yield Corporate. This did recover pretty nicely off the lows, but it still broke down. This was an obvious bear flag, bearish pattern, which followed through. But it did recover off the lows. Now this area up here is resistance, where it could fail potentially. Next, chapter 31, 10-year Treasury yield. As you know, that had a nice ascending triangle pattern, which played out, spooked the market, pulled back to the 9 EMA, bounced. Okay, I'm not sure this is ready to go back up yet, or perhaps, could it need something like this? Maybe a zigzag. Moving on, following up in a few of these sectors, here's the XLK technology, very similar to the triple Qs, nice rally up, back to the 9 EMA. Obviously, it's still got plenty of resistance above. Next, chapter 33, XLC, the communications sector, has a lot of these FANG type stocks in it. I adjusted this trend line, horizontal line, which we held this support the other day. Really not very far away from its 200-day, but did rally up today. This area up here is your resistance. We do add some divergence at the lows. Next, chapter 34, banks, little pullback today, held the 9 EMA. Overall, though, this is a bullish pattern. Kind of a cup and handle look to it. Next, chapter 35, financials, also decent looking pattern. Next, chapter 36, energy, finally pulled back. Remember, this sector super stretched. This inverse head and shoulder pattern clearly played out that I pointed out weeks ago. We've had plenty of long ideas in this sector, but it was time to take profits yesterday. Next, chapter 37, the BP Bullish Percent Energy Index, still at 100%, as I commented on Monday. This is getting very stretched. It's a bullish percent chart. It can go from a theoretical low of 0 to 100, okay? Best time to buy energy stocks are when it's down here, when it's down here, when it's here. These areas are the time to be taking profits, right? By the way, guys, I have a system that I've developed on this. I got to work on it more, but it looks to be pretty good. So I'll let you know when I have some more of that. But essentially, it's a system that tells you when to go long down in these areas. But that'll be for another time. Next, chapter 38, utilities. Let's get rid of those. Nice rally up today. Remember, it was down 14 consecutive days here. Was a statistical reversion to mean. Now, if you held it for more than just that one day, gave it some room. Notice you held the 20-day or the 200-day moving average here. Really nice move. You were rewarded finally. Next, moving on to commodities. A lot of the commodities pulled back today. Again, they've been on fire, so they're giving back some, like DBC here. The 9 EMA is your first support. Just got a little overbought. Next, chapter 40, crude oil. Little pullback here. This form of resistance is now support potentially. Next, Chart 41, natural gas, big pullback, 10%. Again, not surprised. It's had one hell of a run. Next. Chart 42, copper. It's still in this coiling pattern. Contracting trend lines. We'll see which way this ultimately breaks. Next. Chart 43, cotton. I haven't looked at this in a long, long time. But, you know, you can see how commodities have been in a bull market since last year. Look at this pattern. Broke this last year. Had a beautiful ascending triangle here. Big move the last couple weeks. Look at that. Wouldn't touch it right now, but man, that was a bullish pattern. Next. Chart 44, here's the monthly chart. Big Stan Weinstein type base here. And finally, chart 45, here's the daily. Look at that move. Again, I wouldn't touch it here now. Look at your ribbons. They're stretched. RSI's overbought, but it'll be a commodity I will follow in the future. I don't know if there's an ETF that follows this or not. Finally, chart 46, URA uranium. So I thought maybe we had an ABC low back here. Not sure now with this correction. It may want this 50-day. Okay, so be aware of that. All right, let's move to cryptocurrencies. Chart 47, Bitcoin. Look at that big rally. Again, guys, this to me was textbook. You had a 5-wave move up here, impulse move. You had an A, B, C. On an impulse move, you buy ABC corrections. This was at support. It's very good area. I went long some Bitcoin back in here, and I added on this trendline break. But really nice textbook move. Next. Chart 48, Ethereum, same deal. Not as strong as Bitcoin though. Next. Looking at some of the individual stocks, GBTC follows Bitcoin. Had a nice pattern. Nice move. Congrats if you've been in it. Next. Chart 50, Mara. I had this on Monday's newsletter. Nice move the last couple days. Next. Chart 51, UUP, US dollar, ETF. Textbook, ascending triangle. Notice that it broke out, pulled back, held that support, and rallied up. We'll watch to see if this gets even stronger or not. That could negatively affect commodities. Next. Chart 52, FXE Euro. This head and shoulder pattern that I drew back in May continues to play out. Next. Chart 53, gold. Gold didn't do much today, but look at the ratio, guys. I keep saying to watch the GDX GLD ratio. Curling up here. It's looking interesting. Next. Chart 54. Here's a chart I don't show that often. It's a big monthly chart. Now, the bullish view here, guys, is sort of like a big cup and handle. Okay? Notice you have this ABC. Could gold eventually do something like this? You know, everyone thinks gold is dead. We'll see. Just keep an open mind. Next. Chart 55, silver. Otherwise, silver down today, still in this channel. Next. Chart 56, GDX daily. Did rally off that lower trend line I pointed out last week. Nice move today, 20-day here. Not much of a pattern here. Otherwise, it's not really a textbook wedge. What we may see, perhaps, is, you know, something like this. That's something to keep an eye on. Next. Chart 57, 60-minute view. So I pointed out this higher low on Monday. Said you could have a swing stop there. You had a beautiful textbook falling wedge here, A, B, C, D, E. And notice we broke out of that range today. Ribbon going positive. Next. Looking at some individual names. GSS, low-priced one. I had it on the watch list for a good week and a half. Broke out of here. The sucker went up to $3. That was a huge percentage move. Okay? Essentially, it hit it, made its target. Measured move. You see that? Congrats if you're in this sucker. Next. Chart 59, HMY, beautiful textbook. A, B, C, D, E, falling wedge. Broke this the other day. Nice move today. Looks good. Next. Chart 60, IAG is trying to break out of this little base. Again, these are the 3 stocks I've been showing for at least the last week and a half. Go back and look at my previous videos or newsletters. Let's look at some new ones, guys. Chart 61, NG. Now, this one's already had a pretty good move. I wouldn't buy it here, but what I would maybe be interested in is buying a light volume pullback, kind of like that. Next, chart 61, HL, Commodities, the silver stock. You have a kind of a wedge, falling wedge with MACD divergence. Next, chart 63, Newmont, also falling wedge. Looks decent. Next, chart 64, NGD, little double bottom. And finally, chart 65, RGLD. This one's really got taken to the woodshed. But, you know, look how many days it's been down in a row. Reversion to mean. This one may be back to the 9 EMA. I wouldn't view this one any more than that, though. There's no pattern here, guys. Maybe just get a bounce up to here. So I like the other ones above better. All right, let's follow up with trade ideas. So ExxonMobil, all these energy stocks we've had on the list, they've done well. But let's go ahead and move on to some new setups. BABA, I've had this on the list a couple times. You know, the Chinese internet's been in a downtrend for quite a while. We all know the issues there. There is a potential falling wedge with MACD divergence here. Next, chart 68, INSM, tight coil pattern. Long here, stop here. Next, chart 69, ATH, coiling pattern. Looks good for a long, perhaps. Next, chart 70, KHC, little basing pattern, resistance right here. Next, chart 71, LXRX, just a quick trade. You got a horizontal resistance right here. Volume picked up today. So I just view it like as a trade. Not much of a pattern here, just a little horizontal resistance break. Next, chart 72, DTEA. Now this is a 60-minute chart. I like the volume pickup here. If you can clear this. Again, I'd watch it on a 60-minute time frame. Maybe you can get a trade. You notice there's an open gap back here. Next, chart 73, BEST. Little cup and handle look. Low price sucker. And finally, chart 74, Roku. I like potential bottoming action here. MACD divergence. Big volume today. Nice strong candle. You could perhaps go long above today's highs for a long, a stop at 50, immediately 50% of the candle here for a tight stop. All right, guys, that'll do it for little trade setups. Again, futures are up tonight. Let's take a look at that, see if they're still up. So here's a 5-minute chart of ES futures. Look like they're up about 14 at the moment. All right, guys, take care, and we will see what happens on Thursday and, of course, on Friday.